Good morning, Quasar Markets Live. You are in for a good one. We got the man himself, the living legend, Bubba Todd Horowitz. How are you doing today?
I'm doing great, Howard. It's always great to be with you guys. Great show.
Thanks. We love having you here. Wanted to bring you on. You've been in the markets for so many years and you've done everything from being the market maker to now teaching retail traders how to take advantage of those market makers. So we wanted to bring you in and ask you a few questions today. I'm going to start off with zero DTEs. I saw this week on Monday, all-time record on the SPY. 58% of the options that were traded that day were zero DTEs. What's your view on this explosion?
Oh, I think they're great. I mean, I think if you know how to use them, remember, everything goes back to, do I know how to use it correctly, and can I take the biggest benefit from it? Too many people use those zero DTEs almost as lottery tickets and are trying to buy something to get some mass explosion, which they're well overpaying. I think if you learn how to spread them and sell the credit for a move you're expecting, I think you're in a much more favorable position with a lot less risk, and you need a lot less or a lot fewer things to happen to make money. In fact, on Tuesday, I was doing a show and we sold the IWM put spread for the DTEs for the day. We got 45 cents for $1 spread. We made $45 a contract. That they went out and expired worthless, which is what you want to try to do. Again, just because they're available, you still have to know how to use them correctly to give yourself the highest probability of making money.
Yeah, you nailed it. That's part of the problem. What I was going to ask is retail getting gobbled up by the market makers here, or are you seeing more sophisticated plans like you just said? When I hear zero DTs in my mind, I think it's a naked call, a naked put, or a naked, and they're not thinking about using covered calls or more advanced strategies that someone like yourself teaches and uses.
I think that 99% of the population has no idea how to use options correctly. I think they make a lot of mistakes. I think they give away way too much money. I think that it becomes an issue because, again, we are too much swayed by news you may hear on TV versus the price action that you will see in the market. I mean, the chart will tell you anything you need to know, but the way that people use options is not usually very good. They don't have a great understanding of really what is the greater probability of this event occurring. And then, of course, we get into these little bit more volatile times, and the price action is not volatile, but the implied volatility is now more volatile. And we're now getting to a place where if you're buying naked options, you're getting ripped off.
And they don't know. They don't understand that's what they're doing. They're buying. You are buying and selling volatility at a naked call or a naked put, not the price anymore on a zero DTE. Let's face it. And if you're buying when IV's too high, you're gonna lose. It doesn't matter what the price does.
You can't get big enough movement for what the market's pricing in. And I urge anybody to watch not an expiration, but watch an earnings report. As we know, or you may not know, that all volatility explodes on the weeklies into an earnings report, and then it collapses. Well, what the options are telling you is that there's an expected amount of price movement. If that move doesn't come, both sides, puts and calls, are going to collapse.
Yeah, and that's and you just said it. I couldn't agree more. I've put across the bottom how folks can find you and your company at Bubba Trading. You guys have a ton of courses available that teach people and get people educated through it. And that's what we try to do here at Quasar Markets, because it retailed, you look at this, 87% were losers the other day on that number, because they were buying naked calls and naked puts and not understanding the Greeks, and that it's not just that theta comes in on that last day at a logarithmic direction. And if you're not played on the right side of it, you're just going to get gobbled up. So I think we all are in the same spot. If used correctly, if used, and for a lot of people, and from back in your days, the market makers, it would be used as a hedge more than it would be used as an actual strategy, right? So that's sort of the change too.
Well, I mean, I have I'm always 100% invested. I'm always 100% long the market from an investing standpoint. I use derivatives, options, to hedge my overall portfolio, so I don't have to sweat out the small stuff when the markets go down 13% or 15%. I'm actually buying more stock on the way down by using those trades because they actually buy them automatically for me. But I think the biggest thing that people don't get is that if you're investing, the worst thing that ever happened to us is iPhones and Androids and computers. Because when you didn't check your statement every day, you weren't tempted to panic and puke out every day.
Absolutely. Yeah. And that's what we've been talking that about here, Steve and I, and you have a great term for it, puking at the bottom, don't do it, is the capitulation we're seeing. I'm seeing long-term investors who are still up tremendously on a Tesla, on an Nvidia, just to pick some easy names, they're getting ready to capitulate out. And like you said, the right way to do this is you should have already had, as Steve says, protective condoms on, for the market to crash on you. And you should have been, in the right spot. But what you don't want to do is overreact. You need to take time to respond to what just happened.
I think everybody always, if you're getting nervous and you're thinking about panic selling, I think you need to take a deep breath first and think about it logically, that there's a higher probability of some retracement. And if you really want to sell, you'll be able to sell better than you're going to sell when you're thinking about it.
Okay? Yeah. And isn't it amazing that the only thing that people want to spend more money on is stocks and crypto? No one wants to buy Bitcoin anymore at 80, but everybody wanted it at 100,000. Nobody wants Tesla at 225, but everybody wanted it at 480. I did some research today to look at like Nvidia. Nvidia is now at like 23 times earnings. It normally goes at 40, and it's better than Chipotle. You want to own Chipotle for the long term, or you want to own Nvidia? No offense to the burrito.
No, this is the more people buy tops and sell bottoms versus the other way around. Right now, you should be looking for some value plays, as you put it. You should be looking for stocks that you believe that are going to be in business and that are going to be around, because again, let's face it, the simple numbers are easy. The stock market has gone up 8.5% year over year in its history. It has gone up 10% year over year since 1950. So again, if you look at any statistics, you're better off being in. And I'm not talking about trying to buy garbage and gambling on a lot of these new quantum stuff and all that uranium crap that people play. I mean, again, there's nothing wrong with gambling on that stuff. But when you're building a long-term portfolio, you want to have the names that make money, that are going to be in business, and that have good prospects going forward, no matter what the stock is doing, because over time, they're going up 8.5% year over year.
Absolutely. We talk about that best of class. I saw JP Morgan was getting hit really hard earlier. I don't know if they're still down. Not as much, but they were down like 1.5%. And I'm like, what happened that made JP Morgan less profitable today? If anything, they're gonna borrow more money against their holdings to buy more stock right now to take advantage of what is going to come. Nvidia, like I said, I want the new Blackwell RTX chips for my GPU. I can't get one. So, they're not going anywhere. Meta, any of the Mag 7, I'm going to bring up the charts a little bit here. We're not going to get too far into the weeds there, although if I don't hit present, it doesn't come up. And now it doesn't want to come up. There we go. Are there any of the Mag 7, right now that you're thinking is interesting, or are you still saying, man, I just got to see some things flesh out here?
Well, it depends. Are you asking me as a trade, or are you asking for it as an investment?
As an investor.
As an investor, sure, I would buy just about any one of them that is very oversold here. Again, I don't have a problem with it. I mean, I own Tesla. I own Coin. I love Coin. Okay, yep. I own Nvidia, and I would be happy to buy them. Listen, they're very oversold. Listen, either way, I believe you're going to get what I call a rip your face off rally. Okay, we could rally 5% in the NASDAQ or 6% in the NASDAQ and still be in a bear market. Okay. So yeah. I'm a big believer in buying. If you're buying for an investment, again, there's a difference, because I also buy to trade them, right? I will do both, but I will do a different type of position if I'm buying to hold it versus if I'm buying just to trade it. But anything, the simple thing that I think that anybody can do is if you put up the Bollinger Bands, okay, which were built by John Bollinger in the 90s, okay, they're a mathematical calculation, 2 standard deviations up and 2 standard deviations down. If there's a company that you really like, that you want to own for the long term, and it's oversold, which means it's on the bottom level, that's a pretty good spot to buy it. for at least a pop there and a pretty good opportunity. And if you want to make it a little bit more safer, use a weekly chart. Again, you don't have to use a daily or a minute or a 5 minute or a monthly.
Yeah, you can say you say that if I show mine right now, like you're saying, I've got all my stuff set up on a weekly with liquidity zones that I'm looking at here. Exactly. I don't need to break it down to the minutia. I knew that as soon as it broke below 109, I was interested in this liquidity zone because
you only use the minutia when you're trading short term. You need to have a little bit more information when you're like I'll trade 4 minute and 1 minute charts, right? And again,
and that's what I have here on the right.
That's not what we're doing here. So I think that when you look anything that gets extremely out of whack, oversold, because most people are going to look to be buyers, you want to go ahead and if you're looking to invest, that's probably a pretty good spot to take a look.
And like you said, I do keep Bollinger Bands up on my short term here. One, I'm just going to take off my VWAP because the two together don't play as nice. And you can see what he's talking about here. This green line in the bottom would be the bottom edge of the Bollinger, your midline on the Bollinger, and your top end here. They work well. Like I said, I use VWAP a lot the same way, to use it for more for momentum on the VWAP than the Bollinger, looking for a break through the VWAP there. It is an interesting time for sure. I think, like you said, what it was an important takeaway for me there too is using derivatives to do your short-term trading a lot more than you are just buying and selling the stocks generally, right?
Yeah. I think, listen, at the end of the day, you have to make your decision of what you're looking at. And you have to have a reason to buy or to sell. Okay. And again, I think accumulation is the best that you can do for people over time. Again, you should never fire or use margin when you're investing. You have to have money to be able to invest and hold. And then, of course, if it goes a little bit lower, you can go ahead and buy some more.
We talk about that. Dry powder on the sidelines is always important. Another thing that you brought up, I was asking if, are the market makers taking advantage of us right now? And you were pointing out that there isn't really that two-way price action that you would used to look for so much as a market maker. Could you talk a little bit about that?
Well, again, the fact of the matter is there's very little true market makers left in the business. Right. It's pretty much all electronic. It's been the bigger benefit to the retail customer because the market makers, the truth is the high frequency trader, which are really electronic market makers, are working on fractions of a cent on billions of transactions.
Yeah, they're just scalping.
But they're just making markets back and forth, right? Because they're in and out on a rotation. There's very few manual market makers, but you will see the same thing still applies when it comes to options. The markets, the implied volatility will widen. And the one thing that everybody should always remember is there's no such thing as a cheap option. Options are always fairly priced unless they're expensive. Okay. Think about it.
Yeah, I know exactly what you're saying, because if you're getting when they're expensive, you're paying for that volatility that is enhanced.
And they're never cheap, as guys will say on TV. Buy cheap options. They're not cheap. There's a market being made, and you can bet your ass that no market maker, computer or real one, is going to give something cheaper than what it's worth.
Yeah, if you think you're outsmarting those algorithms, you are unfortunately, sadly mistaken. They've been working on them way longer than the AI world has been sort of in existence on these algorithms. We have Steve Flanagan a lot, who used to be in charge of electronic trading for JP Morgan's currency desk, and he was doing that 15 years ago.
Just remember, the algorithm's got no emotion. The computer program's got no emotion. They have no.
That's why we say market has no emotion, right? It will take your money. It doesn't care. It doesn't care at all. We're not talking about Ken Griffin at that point, who doesn't care either. But in this case, it's machines, and like you said, they are programmed to take in data points from everything, from whether it be economic data like our CPIs and our PPIs today, or even to this point, I have no doubt that they're monitoring tweets out of the White House and things like that, and they make an immediate direction call based upon what just happened. Because you see these huge spikes, like you say, the numbers, the price action isn't moving, but the volatility in a 1 minute ticker, 2 minute ticker is moving significantly.
Exactly.
Yep. Any other words of advice that you have on what you're doing maybe differently trading in this volatile time? Are you, quicker to take profits or cut down the sort of take profit levels that you looked at? Or for you, it doesn't really matter, markets up, down, sideways?
Markets are markets. I'm going to take what I'm going for my targets. I may adjust a little bit quicker in live in a trade if I don't see what I want to see. But I think, again, if you're investing, invest. Don't trade. Don't trade that investment. It was the old classic story. A person bought two stocks. One was for an investment. One was for a trade. The investment immediately ran up, and they took the profits. The trade went down. They said, "Well, I'll turn it into investment," and it's still going down today.
Down. Yeah, that you just nailed it. That planning out what your trade is, understanding your thesis, and sticking to your thesis. I think that, and for the years of coaching that you've done, is that what you find that traders get in their own way more often than not? Because I found that in my short time as a
trading. 100%. Listen, as I said, most people don't understand the markets. Most people are still driven by news that by the time you see the news on CNBC or Fox or anybody else, it's already priced into the market.
Absolutely. Yeah. I mean, most of the, and the other part they don't realize that I know you were part of in the old days is that they're directed by these companies and by market makers, and Jamie Dimons are giving a call to Jim Cramer and saying, "Hey, have you looked at X lately? And have you looked at Y lately?" And they're doing it to tweak the market, and they get at, and you get articles written in the journal and other publications based upon that sort of view of it. And let's face it, they're there for clicks. They're not there to educate the trader.
No, and you can bet that some of the information you hear is directed to create movement for the traders of the firm. Okay.
Yeah.
And typically, if they make a big call, like oil's going down to, in fact, Citigroup made this call back, and oil's going down to 26. They weren't selling; they were looking to buy.
And they're pushing it.
They wanted the panic in the street.
It's funny. Big Beat always uses the gold ads. When you see the gold ads all over, which you do today on CNBC because it's at 3,000, that's when you need to get rid of your gold, because that's what they're doing. they're getting they're about to get it to drop, and they want to buy it back in cheaper, and they're getting you set up to do it. And that's what you see on a lot of these. I mean, listen, we've seen it over the years. If you are watching Twitter and person X is saying, "Hey, take a look at NVIDIA, the 110 calls because, 10,000 were bought," you better believe they already own their part of that call before they're telling you about it.
100%. Listen, again, it's the same old story. The news is already priced into the market. Unless you know something directly from a source that is reliable, these guys are paying millions of dollars a year, not to get inside information, but they have people scouring the tape, scouring Reuters. Every second of the day, they're paying huge dollars, just like when the jobs number comes out. They already know, the jobs number comes out about 7:15 or 8:15, right, and it's supposed to be under closed door, let the writers write their stories, and then it releases out, right? That sometimes it sneaks out a little bit early. Again, they try to prevent it, but things happen all the time. You have to just allow yourself to read the tape or read the charts. As a floor trader, we didn't have charts. We had to be able to read the tape and read the price action as going. But as a retail trader, you're looking at a chart. The chart is telling you what the map is and what its next expectation is.
Absolutely. Well, Bubba, I appreciate you coming on and giving us your time here, like always. Such great information. We will get you back here soon. Again, make sure you check out Bubba at bubbatrading.com. He's got great insights. And as he just explained, there you can have a long-term bullish view and trade using derivatives and options to protect that and make money as you acquire more. I know the next person we have coming on uses the wheel trade for a very similar thing like you're talking about, and tries to bring down the cost average of his holdings tremendously by selling out of the money.
Trading the wheel. There's a lot of different strategies. By the way, do you know I've written 2 books, Howard?
I did not know that one.
Okay. I've written how to trade weekly options and how to trade regular options. And certainly anybody in your audience, I'd be happy to give them a PDF file copy of the books if they'd like them. They just have to email me at bub@bubbatrading.com, and I'll have a copy sent to them.
I'm definitely going to email you to take advantage of that. I would love to get some of your insight there. Appreciate it so much, like always, Bubba. We'll see you again next time. Thank you so much.
Have a great day.
You too. Okay, Quasar Markets, like I said, we are very excited. Next up, we're going to have Jeremy Vreeland. A lot of you see Jeremy here Tuesdays and usually Thursdays with the Watch List and with Rebel Podcast with the boys over at Tuttle Capital. They do a great job, and Jeremy's being nice enough to join us. Jeremy also, part of his day job is with Bullish Bears. We're going to bring him in here. Jeremy, how you doing today, buddy?
Oh, better by the minute. I get paid for time. It's great.
Awesome, man. Well, we're happy to have you here. I'm going to get your information here off of my other set here. So I have it. And you can find Jeremy. He has he's so important. He has two Twitter handles. He has his personal one and the work one from Bullish Bears there, but make sure you follow them both. Jeremy, how are you trading today? You playing the volatility aspect today? I know you are a big fan of using volatility to your advantage.
Oh, yes. Volatility means more premium to me. I mean, anytime I hear something going crazy in the market, I just go look at the options chain, like, what can I sell today to open? So,
yeah. Could you explain a little bit there? Because that's one of the things that I've done recently has been getting paid to wait to enter a position. So maybe if you could talk about what you mean there.
That's exactly my opening statement. I get paid for time, so it's better by the minute.
I love it.
As an example, like if you think of selling to open options against a net long position, so if like you're long at least 100 shares of an equity, you can sell covered calls. I like to say be prepared to double that position, and you can also sell cash secured puts in the same equity. So you get paid to wait for your entries at support, and you get paid to wait for your exit or even avoid your exit at resistance. So it's essentially aligned with swing trading, but it takes it to the next level where you can be much more passive and patient with your charting, because it's pretty easy to see a relative support area or a relative resistance area, and not everybody has time to watch the charts all day like we do. So this strategy is kind of what made me able to be where I am today. I replaced my income with this. So getting paid for time means as those options are decaying, because the biggest factor that eats them up is time decay, especially when you're selling weeklies. Yep. You're literally getting better by the minute. It's the greatest thing to be able to say.
And you have a different approach than some people, because I've noticed you like to use it to really bring your cost average down on a long-term holding. And, we just talked about that with Todd. And, he does it a little bit differently, but, as he said, he's always long-term bullish on the market. So he is always investing for the long term. He uses derivatives to offset that portfolio. With yours, you use it to actually build your portfolio of long-term holdings. Basically for nothing is the goal. But, as you've talked about with TNA, I know you did some crazy stuff over the years.
It's nuts. So with TNA, that's an interesting example, because I was just talking about that with the Bullish Bears community just yesterday. Even though it's bearish currently, it's pushing support levels it hasn't seen in a long time. It's a fairly clean measured move if you look at it on the daily chart. You can see the primary, secondary, like I would see right there on the end of the chart. Even though that is pushing down, since starting my position a fiscal year ago around middle of March, in net total, if I take that long equity position along with the cash I have ready to deploy to double that position, overall that has yielded about 58% in a fiscal year. Well, technically that means I own more than half of that position for free.
Right.
So my running total from March is still far below the current share price. It's like $16 and some change. I'll look at it later, but you get the idea. It's a pretty significant.
Yeah, it's very lucrative, and if you have the right ones, and I know that you do it a lot with the actual leveraged positions. I know, if I'm not mistaken, are you still in MSTU, or did that one?
Oh yeah.
Okay.
MSTU has been awesome. So I started that position February 28th, and my cost basis is already down to $3.25, far below the current
which
low.
is 481, and that stock has dropped during that time. So that's what I want to point out, and what Jeremy is saying is, by using and selling them, he's able to outpace the loss within the actual underlying equity. And his goal is to someday own that for free. And then he still makes profit after he owns it for free. But his goal is to have 100 of these, or 200 of these, or 100 of those, and then 200 of those. And, eventually he's got this great portfolio of leveraged products that he just owns for free.
I mean, an example of worst case scenario is, over time, once you break that zero barrier, once you own it for free, and your cost basis becomes negative, you could care less what happens to the equity. You just keep pushing premium and keep generating income on it until it
and
doesn't
I love
anymore.
it. You don't call it that way because of the way you bring yours down. You use it as a way to build your portfolio.
Right.
Other people will talk about it as real estate. You're renting out real estate. You're using your stock like it's a piece of, a property in Airbnb, and you're saying, I'm willing to rent it out to you for the X amount. And, those people tend to mitigate as it gets closer to the edges because they don't want to give up those shares. They want to keep their property, but they just want to keep renting it out and renting it out and renting it out. I like your version, as you and I are going to work a little bit together on some wheel trade videos, and you're working. Can you talk a little bit about what you've got going on and what you're working on?
So essentially, I've kind of established within the Bullish Bears group the beginnings of forming what I'm just going to call the Wheel Trade Club, and it's already garnering quite a bit of interest in the Bullish Bears community, and I think I want to see if I can straddle that across a couple platforms here, because I think that there should be a lot more interest in this, and also it's great to kind of put a group of heads together. It's like a group think, so to speak. So you can all kind of thrive together. It forms a community of its own.
Right.
And the beneficiary of this overall, 1,000 times down the road, is going to be the average working individual, who has to go and put in a full work week. You can still run this strategy just simply with a little input, a little insight into watching where resistance and support are, picking the appropriate strike and date till expiration, and literally just setting your limit orders. I mean, you can set them before bed at night, and if they fill, they fill. If they don't, they don't. It's a fairly passive strategy. You don't have to be on it
like
all
you
the time.
said. I do the same thing. I tend to look on Monday nights for the weekly ending on that Friday, because this Mondays have been just a weird day, and I'm like, you know what? I'll give it some time to settle out. And then Monday night, I take a look at where the closing was on the weeklies that are going to expire in 4 days. And I set my limit orders, like you're saying, for Tuesday morning open and ready to go from there. So, it's one that you don't have to sit there like scalping, but you're getting almost the same benefits of the scalp because of the amplified view that the options give you. Is that accurate to sort of say?
That's it. And it doesn't even have to stop there. Let's say like you end up in a position where you might become underwater. Let's say the market's having a meltdown. In the previous guest you had on there, it's kind of stated this pretty well. One way is to protect your capital at all costs as well. And the thing about options is it's giving you the opportunity to adjust positions. So if you find yourself in trouble, there's another strategy you can learn that parallels this to protect capital, so you can park it for a while and work on other things.
Absolutely.
Any income you've generated is through the power of compounding, building your portfolio size. So you maintain the same position for years and years and years. It's an income strategy. That's deployable capital for other things. That's why I'm jumping into MSTU and NVDX this year, because I've got more deployable capital after trading TNA for so long. I've got plenty of capital to run a couple other things. It diversifies itself over time. The other part of this is being able to adapt the strategy. So if you expect that, well, it's starting to break your key support level, it's starting to kind of eat into your current front position, you can also adapt it into a collar strategy relatively easily, and still generate income on it. You can still get paid to have a collar. So
we'll go over. I don't want to get too far into the weeds because I think
we'll lose
people, but you've nailed it mitigation and exit strategies from options are so important. And again, what I love is that what we were just bringing across with Bubba there too is options are a very good way to trade and a very good way to protect your portfolio. And in this case, to bring down the cost of your underlying asset and earn income off of it. But you've got to understand not just the basics, you need to have mitigation so you know what to do. If you're in the position, you need to know if X happens, where is my break-even point, or where is that position where at that point I'm no longer comfortable owning the underlying, and what I would do to mitigate out of this position at that time. And if I'm not mistaken, you've done that too, where you've exited fully out of TNA at one point and then got back in. Is, again, even from a long-term position, you can say, hey man, things don't look good right now. I'm going to pull it off for a second or two. Let it do, like I just said, I don't like to play with the Mondays. That just became my personal thing. Is, don't get me wrong, I could get a little bit more premium if I sold on Monday versus on Tuesday. But what I've seen is Monday gives some false signals in the morning and it can screw that price up.
Right.
I wait for it to sort of stabilize because I'm looking at it more like an income rental of the Airbnb than and using it that way. So, there's so many different ways to play when it comes to that. And the other thing I did want to point out and ask you more about is, one of the things you've done a good job with that I've seen Dr. Ellman talk about from Blue Collar Investor is using some of these ETFs allows somebody without all that capital to get into the game.
Right.
You can get into the game on NVIDIA at $9.02 right now, where they're trading at 116 if you want to get into actual NVIDIA.
And even some of those leveraged ETFs, I mean, T-Rex has been pretty good at maintaining value, but a lot of them, they end up kind of slowly.
You got to watch the volume. You got to watch the volume and make sure you're keeping an eye here. You can see, this is daily volume on NVDX. It's been pretty good, dropping down a little bit today, but overall it's been pretty elevated going back here to, mid-January. And you can see that it still is. Yeah, you definitely want to make sure you're watching that. MSTU is the other one we talked about for it.
And then you mentioned like when I jumped out. So that's kind of a two-edged reason, and I was also talking about this earlier with the Bullish Bears community. When you're going into two ways to monitor this, you can monitor it by profit overall, which is fine, but it tends to sometimes get people a little bit into FOMO mode. They'll let their emotions kind of take shape. The greed monster comes out, whatever. The biggest reason why I track it in a cost basis fashion is because that way I always know where my break even is, so that if there is something that starts to threaten that, I can reassess, I can exit the position, I can go and collar the position, whatever I feel is appropriate at the time. So it's kind of a double-edged sword, so to speak, to both defend and attack at the same time with your
you use it either way. Do you watch implied volatility a lot to make those decisions on that?
I do, and I tend to notice
a price action guy, right?
I'm more of a price action guy, but I also know that the opening hour, in spite of price action, if it opens relatively close to the previous day's close, you tend to have some heightened implied volatility on the open. That's where a lot of opportunity lies. So sometimes you'll see that big jump in implied volatility on the open. You can get a little more premium.
You want to sell that premium then.
Absolutely.
For sure.
I mean, I've had situations where, like on some equities, I've gone and sold to open in the morning, buy to close in the afternoon, and then sell again to open on the closing. I mean, it happens if you're on top of it.
Well, and more often than you kind of think there, actually. Again, if you're looking at it right and you're using a calculator that takes into effect your time cost basis, which is what I use when I'm figuring out these weekly options or monthlies, what I want to use, or dailies, if I'm using SPY or QQQ, although they've sort of left my price range, as most other people's, but with those is, again, you can absolutely make a decision in the middle of the day, and you might have sold it when implied volatility was up in the morning, and then things calm down and Putin and Trump shake hands and everybody's happy in the afternoon. Go ahead and buy it back at a much lower cost and just take that short-term win, right?
That's it. I mean, I did exactly that with MSTR. So like I was early assigned on a 450 strike. I sold that for 50 cents premium. So my cost basis on that particular assignment was $4 a share. Well, I get assigned And then the next day, I'm able to liquidate those assigned shares because I always like to maintain a half-size position in cash to be able to sell more puts. I was able to liquidate those the next day at $5 exactly, which knocks a whole dollar off my cost basis in an overnight swing. And then
20%. Think about that. $1 doesn't sound like much. It's 20%.
Yeah, that's huge.
That's a huge savings by being flexible, by understanding what's going on and understanding that volatility is what's changing. That price didn't move to make $1 change. It's the volatility that moved.
And then what was funny is later in the day, I mean, it dropped down to, what was it, 339 or something like that. Yeah. I was able to sell 350 calls another week out and, net another 45
rinse and repeat is what you can do on some of them. You get that nice jump because what you should start to understand, hopefully, is where you sort of hit your max, if you know what I mean, is, I can make another 10 cents per contract if I stay in this, but am I going to wait 2 weeks or wait 5 days for that 10 cents when I can just do it now? Maybe not maximize my profits, but be happy not getting that last 10 cents. And then, like you said, making 50 cents more in the later afternoon by doing it again or instant repeating.
Yep. And I mean, you can be that nimble with it. If price is going to give you volatility, use it. It's plain and simple. And, at the same time, it also freed me up to, wait for price to appreciate. I'm kind of watching it really, really close right now, so I keep looking to the right. But if I see, and NVDX is another one, but if I see MSTU start to jump up above like 550 or so, I'm looking to sell some covered calls because it's so far above my cost basis. It would just absolutely.
Yeah, at that point, if you're doubling your money, I'll be okay taking 100% win. And then I'll look for because again, 2 days later, you might get the entry you're looking for again.
Exactly. And that thing's got plenty of volatility and plenty of range.
Yeah, you don't see it as much on the day here just because of the way it looks. But when you get in here on an hourly, you can see what this thing does. I mean, it moves without a doubt. Those spikes, those intraday spikes are pretty big.
And it feels incredible to be that far ahead of, even though it's in a bearish trend, to be that far ahead of the bottom of that thing, it's nuts. And in such a short amount of time too. I mean, that's,
And this one, there's definitely no issue with volume. It's crazy the amount of volume that they're doing there.
And then just as one more quick example, like one, and you also knew I probably ran this thing, what was it, almost 4 years, and times of like 4 or 5 months at a time where I wasn't selling any premium on it. But I had that position in LODE. It was recently bumped into the OTC just beforehand. It's nasty. Really, really cheap stock. I sold so much premium on that thing, even though it was trading at like 50 cents for forever. I was cost basis negative $36.14 in the end there. And it's like, dump it. It paid my bills for the whole time. So
you can't argue when it does that. And like you said, if you do these wheel trades correctly, Jeremy, how can everybody find you? How can they find Bullish Bears? How do they get more information? When are you and Matthew on?
So Matthew and I, we bumped today's show to tomorrow. That's why I'm here today. We're going to do the Rebel Finance podcast tomorrow at 11:30. We do have a special guest on. I don't know if I'm allowed to say the name yet, so I probably shouldn't.
No.
And then we are typically on Thursdays, and then we're typically on together on Tuesdays as well with the wheel or with the watch list. But primarily, you can find the community right on bullishbears.com, and then from there, if you are interested in joining the community, we're probably the most affordable community to enter on the market out there as far as what we do. You can sign up, check us out for a month, and decide if you like it. But I'm also going to be kind of branching a little bit. I want to see if we can, if we get enough interest in the Wheel Trade Club, I think we're going to do some expansion from there. So
some fun stuff. Yeah. I've been privy to what you got planned there. I think it's going to be great. I think you should get in this early into this program. Make sure you visit Jeremy and the boys, Julian and the boys over at bullishbears.com. We do show the watch list and Rebel podcast here also. So you can find these guys here on our, platform. Make sure you're watching them. They give great insights. I mean, they've been nailing it for a year and a half at this point. And Jeremy has a great analyst hat that he puts on. And then you got Matthew, who's sort of the contrarian, but also a guy that's a market maker in ETF world and understands thematic trading very well. So they do a great job of that. Jeremy, thank you so much for coming on today. I appreciate it so much.
Thanks for having me.
Absolutely. And again, you can see them tomorrow at 11:30 here on Quasar Markets. But get over to Bullish Bears and check these guys out. You guys do futures trading. What else is offered there at Bullish Bears?
Oh gosh, everything. I mean, we've got probably a guy who's forgotten more about options than I'll ever know, and I think I know a lot about options, more than most people. But yeah, we have plenty of resources to learn price action, options, futures, different methods of analyzing price action, the whole shebang. We have more diversity in four moderators in the channel than anything. I mean, it's crazy how much stuff we know, and we have a passion for it to where we love even answering the same questions over and over again. It's just is awesome.
I'm with you. I've watched you do it 1,000 times. Look at the same chart that someone just asked you 10 minutes earlier and go right through it again. Jeremy loves to look at charts and give his insights. Thanks so much for joining us today on Quasar Markets Live, guys. We'll be back in a few hours with more info for you. Make sure you tune in. And then again, like I said, tomorrow morning, we got myself and Big Beat on at 9 a.m. at Morning Look at the Markets, followed right after that with Jeremy and Matthew on the Rebel podcast. So we have a great week set up for you guys. Go get them out there in those markets, everybody.
Heck yeah. We'll see you then.